Hey everyone, welcome back to the channel. If you are looking to grow your wealth in this 2025, then this video is definitely for you. In this video, we're going to consider the top mutual funds and how they're going to perform in the upcoming year. You must always remember the past results or not, how they're going to be in the future dates. In today's video, we're going to find the best picks among different categories of mutual funds. I've collected over 250 mutual funds here, and in which I'm going to categorize them into three different sectors, going to be your large cap, mid cap, as well as your small cap. So before we get into individual funds, let's first just take a look on about how mutual funds play a vital role in your investment strategy. So these could be your large, mid and small cap funds, and besides that we've got sectoral funds as well as your hybrid funds. So each one of them serves a different purpose in your financial goals, and in this video I'll share my picks on this. Note that there's not any financial advice by any means. This is just my way of observing or like analyzing stocks or analyzing your mutual funds. So without further delay, let's get started with this. All right. So the first thing that we are going to do is we're going to start with your large cap mutual funds. So these funds are like investing well-established companies like Reliance or TCS or HDFC Bank. So they are known to be more stable in the market, and they are less risky when compared to your smaller companies. That's why they are called as like large cap funds, and they have a very solid and strength growth in your mutual fund portfolio. This is normally for long-term investors. So how I'm going to choose from here is I'm going to choose my category. I'm having a lot of categories of funds. This video is specifically going to be in equity mutual funds. So there are a lot of funds here which are available. You could see there are some debt funds too, as well as your ELS related funds, hybrid funds, and a lot of categories are there. So for this video, we're going to just see the equity funds. So I'm going to choose specifically my large cap fund in this. And if I happen to choose here, you could see that their 1 year result as well as the 3 year results are here. The main parameter that I'm going to check here is going to be my expense ratio. So when I'm going to consider this as my expense ratio, I'm going to sort them in their ascending order. So the fund that comes really least on these categories of funds. So some of them are going to be your FOF funds. So FOF is a different category of funds where the funds are normally investing on another mutual fund. So that's, we call it as fund of funds. So these are not individually investing on companies, the individual on different mutual funds. So this is going to be FOF funds. And always do remember, do choose your direct plan on your mutual funds. Never go with your regular plans, because there is going to be a portion of cut which is going to be taken by the mutual fund provider or the person who is going to make you invest into this. So always go for the direct plan of investing. So here I'm going to discard all my FOF funds. I'm just going to choose only my large cap funds. So the large cap funds that are going to come into my list is going to be sorted across my expense ratio. The next parameter that I'm going to see here is going to be my fund portfolio size, the AUM of the fund. That's one of the main parameters that I'm going to look into it. That's because that helps me to evaluate the fund's trend setting changes, which means like they could easily swap their funds. They'll be able to allocate their position. Say for example, a fund size of over 50,000 crores, it will be difficult for them to allocate funds or sell their portfolio and then reinvest the money into this. There's going to be a greater charge involved into it. Also at the same time, there's going to be difficult for them to churn the money. But when the fund size is like really small, it becomes easier for the fund manager to easily churn the money. They'll be easily able to swap the funds. Say for example, sell the stock A and buy stock B. So that becomes easier for them. So these are the two parameters that I'm going to check in this category. So when I'm going to check into this category, I'm end up with different funds. So for example, I'm going to have the large cap funds. I'm going to end up into these three categories. The first one I'm going to have is like Mirae Asset. Then the second one is going to be a Canara Robeco, and the third one is going to be a Motilal Oswal. So these three companies are having a very stellar performance in the market mutual fund portfolio, and here I'm going to choose the least minimum on so the expense ratio. The thing that I'm going to get here is going to be in your Canara Robeco blue chip fund as well as in your Motilal Oswal, because Motilal Oswal has got the least minimum of your fund size, so that becomes easier, as I said earlier. And this is one of the pioneers in your large cap industry, your Canara Robeco. So that I'm going to choose because they have been consistently providing in this, and these are the only guys who are providing the least expense ratio when it compares to the other things. They are giving you a tremendous results too, as well at the same time they're giving you a great ROA on this, as well as your least expense ratio too. So the expense ratio plays a very role when on a long run, because these large cap funds, we go for a 10-year span at least. So at that times, these expense ratio play a very role in this. So that's one of the key thing to observe. The next lowest expense ratio what I have is going to be in your Motilal Oswal. So these are the two things that I'm going to look into it. Further, Motilal Oswal also has a greater alpha here. So that's having an alpha about 10.34. That again is a very crucial value for me. That helps me to make the stock like roar really high in the stock market performance. So whenever there's a bull trend in the market, so these alpha plays a very high role, because higher the alpha, the stock performance or the mutual fund performance is going to be really great. So as I saw here, Canara Robeco Blue Chip Fund is one of a solid performer. So it focuses on blue chip stocks with strong fundamentals. So it's perfect for investors who are looking out for stability as well as growth. The second fund which we saw is your Motilal Oswal. So these are another great choice. This fund picks up only the best large cap stocks and it makes it super diversified. You could see that the list of portfolio in their allocation, this is like super diversified. So this is again one of the best things for you to like choose from this list. So next comes up your mid cap funds. As we all know, the mid cap companies are typically the companies which are in the growth phase. So these are the companies which could become your next large cap, the next 50 companies. So think about emerging players with a great potential in the market. So these are your mid-cap companies. So they carry more risk when compared to your large cap stocks, but they also have a very greater growth prospects too. So coming to the top picks for 2025, the first one that I'm going to choose from this list is, I'll go here, I'll choose the option here as mid-cap. So having chosen that, I'll be able to see that so the mid-cap funds, I'll be able to see that I've got few mid-cap companies here. So these companies I'm going to compare here with this. So the mid-caps, I'm going to compare these three top performers. So the mid-cap industry has been always taken a rally by Motilal Oswal. They are the biggest players in the mid-cap mutual fund industry. In fact, they are trendsetters. They have been giving whopping 50%, 60% results even in these kind of volatile market situations. So I'm going to compare these three different companies. I'm going to see how they are going to perform. And Motilal Oswal has got an expense ratio of 0.54. The thing that comes to my mind here is Edelweiss, because Edelweiss has got the least expense ratio of about just 0.39%, and they've got a very least fund size too. As we discussed earlier, fund size allocation is a very great thing here that helps you to sell and buy stocks easily. So that's one of the key things here. So if I'm going to choose between these three companies. As I said earlier, Edelweiss has got a very least expense ratio, so that's definitely going to be one of the picks. The next pick is going to be between Motilal Oswal and Invesco, and as I said earlier, these guys are like really trendsetters in the mutual fund mid-cap industry. So I'll definitely go with Motilal Oswal or Invesco. For this video purpose, I'm going to definitely go ahead with Motilal Oswal, because they are like lead runners in the market. So it's always definitely following up with the trendsetters is like a really good thing. With the FOMO, that's basically what we all have. So we all have this FOMO in us. So it's definitely go with the stream. So the big fish, just follow the big fish. They'll take you to places. That's the strategy that I'm going to use here. And if you wanted to be like more diversified, then you can definitely go with Invesco too, because they are also been giving very greater results. And if you could see here, the past 1 year's result is whopping 55% by Motilal Oswal, whereas by the Edelweiss as well as Invesco is around 40s ranges. And you could see here, Motilal Oswal has got an alpha of about 13%. That's again a very huge value. As we saw in the large cap sector, this is again a great value for higher alpha in the industry. And their portfolio allocation is like, that's what makes them different, because they've got about 47% allocation in top 5 companies. So the top 5 companies, you'll be able to see them here. Polycab has got like 10% of that, Coforge, Kalyan Jewellers, Zomato, and Persistent Systems. So these are the top 5 companies that they are like investing more than 47% of their asset allocation into this. So they're really bullish about these companies. So this will be one of my pick for the mid-cap sector. Now let's talk about the small cap mutual funds. So these are for the risk takers out there. So these are definitely for people who are really young, who wanted to take a lot of risk in their investment portfolio. So small cap stocks are really newer and smaller companies. They combine together. They could explode in value. They can become really high and greater results. They could also go bankrupt too. That's the only risk which you are involved in this. And if you are willing to take some kind of risk and expecting up greater rewards, then this could be definitely a sweet spot. The small cap industry has got a whopping investment from the users, and there's a small comparison which I'm doing here. And if I happen to choose here from mid-cap to small cap industry is always dominated by Tatas. So Tatas, they've got a very greater thing because their expense ratio is the least in this. They've got an expense ratio of just 0.34. They are one of the most least expense ratio provider. That's definitely going to be in my sweet spot list. And the next companies could be any of these listed here. I'm going to compare here different mutual funds. I'm having Tata, as well as Edelweiss, as well as Invesco. So these three are the top players from here. I'm going to choose from these top 3 lists, sorted as per their expense ratio. And these three, when I happen to compare, then I'm definitely going to go ahead with Tata. As I said earlier, they've got a very least expense ratio. And the next thing that would be coming to my mind is either Edelweiss or Invesco. And Edelweiss has been in the market. They are like creating a lot of waves in the market recently. So if you have to go ahead with that, then you can definitely go with this. And Ms. Radhika Gupta has given up a lot of commentary on the Indian stock market, how she is expecting the market to bounce back after this volatility phase. And she has given a lot of hopes on the mid as well as the small cap indexes. So I would definitely go ahead with Edelweiss in this case. Or if you wanted to go diversified, you can definitely go ahead with Invesco too. And you could see here that the company's results for these first 1 year quarter is going to be 27%, on the 3 years is 24, and for 5 years is 34. So on a long run, if you happen to see the small cap companies, the 5 years period, you can see that the 5 year horizon is always in their 30-34 range. So that's definitely one of the key things that you have to observe. All of these mutual funds, there are like 250 to 500 companies in the market. So everyone invests on these companies. All these big players, these AMCs, they try to invest on these different companies on a different phase of time. That's how it is going to be. Who invests on the right time and who is making the greater results in the market is the entire key here. And as we all go with the FOMO of missing out, we definitely have to go with the industry trendsetters. So I'm definitely go ahead with Tata Small Cap as well as Edelweiss. And I'm going to see how they're going to perform in this market 2025 results. So these would be my 3 picks for the mid, small and large cap sectors. And besides that, we've got a new index too. There are other sectoral investments which are available. We call them as thematic investments. So thematic investments could be in banking sector, it could be in your IT sector, or it could be in your PhD. So PhD is the new thing, that's a fancy thing that's catching up in the market. So that's going to be your pharma, hospitality as well as diagnosis. So this sector is taking up a greater leaps after your COVID outbreak. This sector has got a really great investment coming up from the users. So if I happen to choose or compare in this sector too, what I'll have to do is I'll choose the category from here as I'll choose the pharma sector. And if I choose the pharma, I'll be able to see few limited players in this, and there are definitely Tatas in this. So Tatas, as I said earlier, they've got a very credible name in the market. So it's always advisable to choose one of Tatas in your portfolio. And if I happen to compare these companies here, I'm comparing ICICI, Tata as well as ITI. So these 3 are the companies which are here having a least of expense ratio. I'm going with ICICI because they have given a whopping 47% of results in this last year alone. So that's one of the main reasons why I'm going ahead with them. Or otherwise, they would have definitely gone with SBI Healthcare. So when I compare of these 3 companies, you could see that this is the results they have been providing. And the Tatas, they have the very least fund size of 1,200 crores. You can also go ahead with ITI if you are really conservative and if you wanted to be like really on a safer bet, you can definitely go ahead with ITI. And they have been providing greater results. You could see the last 1 year results of these companies are 47 and 41%. And the last 3 years are like 26 and 27. Definitely a better spot than your large cap companies. So these are more reliable companies. If you happen to see the portfolio allocation of these are investing into big corporates like you've got like Sun Pharma, Lupin, Cipla, Dr. Reddy's, Divi's. So these are like really big pharma players in India, and they've got like greater potential or greater expansion plans for the 20-25 years that's going to come ahead. So these would be my take on different kind of investment strategies. And if you like this video, do share it with your friends. Besides this, if you want me to create analysis on debt funds or overnight funds, or if you wanted liquid funds, or if you wanted to go ahead with ELSS kind of investments, do let me know in the comments. I'll definitely post a video on that too. If you like this video, do smack the like button too, and I'll catch you up in the next one. Thanks for watching.